Okay, so this next video lecture is the continuation of our Module 1, Cost, Concepts, and Classification. So we are now in the second topic, which is about the different cost formulas that is used, okay, in production. So we have here the different costs or formula of how to determine or compute for the factory costs or manufacturing costs and other relevant and related costs. So the first is prime cost. So we already discussed this in our previous video lecture. So basically your prime cost, this includes your direct materials and direct labor. For our conversion cost, so this is the transformation process activities. So we will include here your direct labor and factory overhead. For the factory cost, so our factory cost, this is also known as your manufacturing costs. Okay, so this includes the three elements, our direct materials, direct labor, and factory overhead. For the cost of goods manufactured, so cost of goods manufactured is the portion of the processing or manufacturing activity in which the item or the inventory is not yet finished. Okay, so these are normally part of our work in process inventory. So to determine the cost of this inventory under the cost of goods manufactured, so our formula is, of course, we will add the factory costs, so direct materials, direct labor, and factory overhead, and then we will add the beginning work in process, meaning these are the work in process inventory at the end of the previous accounting period. Okay, so we will forward it in the next accounting period, and that makes it our beginning work in process. And then we will deduct our ending work in process in the present accounting period. So why do we add the beginning with and deduct the ending work in process? The reason for this is to determine how much, okay, or what is the amount of work in process inventory left, okay, or processed, I mean, during the period, because your beginning work in process might have already some of this, or may all of this, I mean, during the present accounting period may have been finished already and transferred to the finished inventory. Okay, so that's why we will deduct any ending work in process with it, to determine the actual number of units that was produced and are still not completed during the period. So that is the reason why we will add the beginning work in process and deduct your ending work in process. For the cost of goods sold, this is the formula to determine the costs of production for your finished goods inventory. And at the same time, this is also the costs that were already recognized during the period, because this cost pertains to the inventory that was already sold during the period. So this is the matching of recognizing the cost against our revenue. Okay. So again, please take note that your cost of goods sold can only be recognized if the item is sold. So for the formula, this is actually, we will use the formula of the cost of goods manufactured. We will add the items which pertains to our finished goods. Okay, so if you could notice, our formula is the same with that cost of goods manufactured, but we only add the opening finished goods and we will deduct the ending finished goods inventory. So the reason again for adding opening finished goods and deducting the ending finished goods is to determine the number of items that was sold during the year. Okay, so again, cost of goods sold is recognized when the inventory are sold, and its formula is, we just continue the formula of cost of goods sold manufactured and incorporate beginning and ending finished goods costs. Okay, So basically, your cost of goods sold, this is what we will include in the income statement under the manufacturing firm. So that's one of the difference between the manufacturing firm and merchandising or service type of business. Okay. For the cost of goods manufactured statement, okay, so you can also prepare this one, but the most common is the cost of goods sold statement. But in other entity for specification and so that they will determine, okay, exactly the cost of their work in process inventory, so they can also prepare this report. So cost of goods manufactured statement. So here, this will present the total cost incurred by a manufacturing company in manufacturing their products during a particular period of time. So we have here an example or sample format for ABC company. Okay, so this is their heading. So again, please take note of every financial report. It should have a heading to identify what report, okay, we are reading or presenting to the users. So again, this is for the cost of goods manufactured statement, and we will also include the period covered for this report. So we have here, we just use the formula that we have presented, okay, in the previous section earlier, right here. Okay, so we just present it in using this format. Okay, so we have here for raw materials. Okay, before we can, the item or the figure that you will use, okay, in computing for the factory or manufacturing cost in terms of materials. So we have here the formula for it for materials, raw materials usage. Okay, or cost of raw materials used in other terms. So we have the opening inventory. This is the opening raw materials, meaning these are the raw materials that were that remained, okay, from the previous accounting period. Okay, and then we will add any purchases during the year. So that's our raw materials available for use, meaning these are the total available raw materials that can be used for production. Okay, and then we will deduct the the ending inventory. So these are the remaining inventory for the period which will be forwarded in the next accounting period. Okay, so this is deducted to determine the amount of the raw materials that we used during the period or the present accounting period. Okay, that's how we compute for cost of raw materials used, meaning from all the available raw materials, okay, so we will deduct what is left. So therefore, the difference of that is what we used in the production. Okay, so aside from the raw materials based on our formula, so we will add the direct labor. So direct materials plus direct labor, that is our prime cost. So aside from our labor and material, so we will add manufacturing overhead, okay, applied. When we say applied, meaning these are the actual costs that were incurred. Okay, so if we will add these three, direct materials, direct labor, and factory overhead, this is our factory cost, okay, or manufacturing cost. But we will add the work in process, beginning inventory, and deduct the work in process ending inventory to get the cost of goods manufactured. Okay, so this is the example of how we present or prepare the cost of goods manufactured statement. Okay, so we have here an example with the amounts. Okay, so for John Manufacturing Company, so in this case, this company is manufacturing soda bottles. So they have here the following inventory data, okay, balances at the beginning and end of 2018. So they have the beginning raw materials, 240,000. Ending raw material is 280,000. They also have the work in process, beginning and ending, and as well as finished goods beginning and ending balances respectively. So during 2018, the company purchased 1 million of raw materials and they incurred direct labor amounting to 1.6 million. So the manufacturing overhead costs are the following. Okay, for indirect materials, indirect labor, depreciation, utilities, and other expenses. Okay, so to prepare our cost of goods manufactured statement using the data provided, so we have here, okay, the solution. So we have the heading, okay, from our data. Okay, so we will use it, okay, in computing for the cost of goods manufactured. So raw materials of beginning inventory plus our purchases. Okay, so that is the raw materials available. So 1,240,000. And then we will deduct from there the ending balance of our raw materials, which is 280,000. So therefore, the amount of raw materials that was used during the production is 960,000. Okay, we will add the direct labor cost of 1.6. So your prime cost is 2,560,000. For the factory overhead, so we will just add all of these items. Okay, so it totals for 760,000. So therefore, our total factory or manufacturing cost is 3,320,000. Okay, so after that, we will add the beginning work in process. Okay, if we will add the work in process beginning and the factory overhead, or I mean manufacturing cost, what we call the amount, okay, of their sum, this is what we call cost of goods to be manufactured. Okay, and if we will deduct the work in process ending, okay, so this is the cost of goods manufactured. So that's 3,340,000. Okay, so this is how you prepare the cost of goods manufactured statement. So those are the different formulas for our costs, okay, in manufacturing. So this is the general, or these are the general formula. So as we go along in our video lecture, so we will be discussing about the cost formulas for labor and factory overhead. I mean materials, labor and factory overhead respectively.